Hi there, you're watching Market Cafe on ET now with me Shreyansi Singh, and with me is Vinny Motiwala, and over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep an eye on and tell you what the brokerages are saying as well. But first things first, let's get started with an important update coming in. And after making the nation proud in the Caribbean and lifting the T20 World Cup trophy for the second time, Team India is back home to a rousing reception from 1.4 billion people. Fans in large numbers gathered outside the Moria Hotel, where the players directly went and celebrated with the staff and supporters by cutting a cake. The victorious squad then also met Prime Minister Narendra Modi at his residence in Delhi and left for Mumbai shortly afterward. The champions received a water salute in the Mumbai airport, and that was a ceremony which is performed as a symbol of respect and honor for the aircraft and its crew. For Mumbaikars, Thursday felt like an action replay of 2007 when the Indian team paraded past enthusiastic fans that had lined up at the roads from Chhatrapati Shivaji Maharaj International Airport to Wankhede Stadium as well. And cut to 2024 now, lakhs also gathered along sides of the Marine Drive promenade as the Indian team celebrated the T20 World Cup 2024 victory in style. The team took an open bus parade through Marine Drive and then celebrated with fans inside the Wankhede Stadium as well. Meanwhile, the BCCI also handed over the prize money of 125 crores to the Indian cricket team at the felicitation ceremony as well. We also caught up with Vijay Lokapalli, consulting editor, Sports Star, and Dwapayan Datta, sport journalist, Times of India, as well as Alan Sippy, former Indian cricketer. Listen in to what they had to say then.
See, every World Cup, it's a cycle. Every 4 years or every 2 years, you will see some retirement. But here it was bound to happen because Rohit Sharma and Virat Kohli and Ravindra Jadeja, they all realized that it would have been very tough for them to maintain the same fitness, same form when you go and play the World Cup 2 years down the line. And with Rahul Dravid also deciding to leave the scene, this was the right time for them to go, because please remember that Indian cricket is very rich in terms of talent. If you see today, an Indian team has gone to Zimbabwe. So you have 15 players ready to play international cricket. And if you see another set of 15 youngsters will be there. So the pool of youngsters in India who are ready to come and serve the senior team is big.
There were so many things that stood out for me. One of the things that actually stood out for most of the people, when you replay the whole thing again and again in your head, you realize that this team fought and they hunted in packs. Each one were like tigers. Each one fought to, really hard to win this game. Everyone played a part. When Bumrah came in, he was magnificent. Hardik Pandya was incredible with the ball. Virat Kohli at the start of the innings, he played like a champion. Then came the incredible catch of Surya Yadav. So the entire team were hunting in packs. This is what makes a fantastic team. This is what Rahul Dravid has done to Indian cricket. He's built this team together along with Rohit Sharma. He's made them fighters. He's made them win this match. It's incredible. It's actually fantastic to have watched this match.
Pressure is part and parcel of Indian cricket. And anything less than a tournament victory is virtually seen as a failure when it comes to Indian cricket. So pressure will always be there. And now that we have won the T20 World Cup, there will be a new generation slowly coming in. And the next T20 World Cup is in 2026. And it will be in India. So there will definitely be a chance for India to win the 2026 T20 World Cup. But then we have to remember that some of the stalwarts are going out and the new boys will come in, but they are not necessarily new. Yashasvi Jaiswal and others also, like who will come in, they have been part of the setup for a long time. So we can see a very good future ahead. There's nothing to worry in T20 cricket.
Let's move on and start getting in some updates on what is happening on the global front and how was the US market actually in terms of the close that we saw. So mixed close that came in from the US market. S&P 500 was subdued and closed on the negative side, while we saw the Nasdaq, I beg your pardon, Dow Jones was negative. S&P 500 as well as the Nasdaq managed to close on the positive side. Even as of now, when you're looking at it in terms of the S&P futures, that is also trading a bit subdued and flattish in trade. Now, obviously, what everyone is watching out for is the labor data in the US market. So the jobs data is something that everyone is watching out for. Looking at it in terms of the stocks that have managed to perform in the US market mainly came in from the technology, consumer goods as well as basic material side. So technology, because technology did well, we saw the tech heavy Nasdaq which managed to close with gains of a good 0.8% in trade. While in terms of overall, we saw healthcare, telecom as well as consumer services which managed to close on the lower end for the US markets. So yes, good performance coming in from the IT companies, the tech companies, and that is why the Nasdaq managed to hold on to gains. Dow Jones Industrial, when you look at it in terms of what was happening on that front, Dow Jones closed down almost 0.06% in trade. So we will be keeping an eye out on more updates coming in on individual stocks in the Dow Jones. Salesforce, on the other hand, in the Dow Jones was only one of the few stocks which managed to see gains of almost a 2% in trade that we could highlight over there. While we had other stocks which actually fell in trade, Merck and Company which was falling, we had Amazon which didn't do quite well. So yes, there was pressure coming in on these names as well. So yes, that's how we're seeing the US market close. But let's look at the European market. Yes, that closes before in terms of the US markets, closes earlier than that. But European markets closed higher in trade. That was an interesting one where we saw DAX as well as FTSE managing to close on with gains of more than 0.5%. CAC managed to close quite flattish, so it will be interesting to watch out for that. Let's not forget that UK polls were yesterday as well. We are keeping an eye out on those UK general elections. That's really drawing a lot of focus over there. Talking about the stock 600, that actually closed provisionally higher by around 0.6% in trade. Mainly banks was something that was leading the gains over there. So interesting update that's coming from the global markets. US, a mixed close that came in. European indexes managed to close with a positive bias right now. So we'll watch out for how the Indian markets actually opened. Yesterday we opened up on a positive side, strong footing, those record high levels. Will that be the case today? That's something we'll keep an eye out on.
Well, absolutely. That's something that we're definitely watching out for. But let's also take a quick look at oil prices then. And oil prices fell in early trade on Thursday after US employment as well as business activity data came in weaker than expected, in signs that the economy may be cooling in the world's top oil consuming nation as well. Let's take a look at price action then. When you're taking a look at Brent futures, then you're looking at a downtick coming in of about 0.3% thereabout. And it was around those $87 a barrel levels. When you take a look at US WTI as well, there's a downtick of about 0.4% there as well. And that, of course, is keeping in mind the activity-thinned trading that we had by the US 4th of July holiday as well. Now, separately, the ADP employment report also showed private payrolls that increased by 150,000 jobs in June, below consensus predicting an increase of 160,000. And after rising by 157,000 in May, now in a further sign of a loss of momentum in the economy, the ISM non-manufacturing index also, which is a measure of US services sector activity, also fell to a 4-year low of 48.8 when compared with what was being penciled in, which was 52.5. Now, you do have weaker economic data that may be adding to the Federal Reserve's arguments to start cutting rates, and that is something that would be on the radar for oil markets as well. Let's also take a quick look at what gold had to do, because gold prices did drift higher as well. And that was after the softer than expected US economic data that I just talked about. And when you take a look at price action, then gold saw an uptick of about 0.3%, was around those $2,300 per ounce levels. So that largely is the handover coming in, Winnie.
Okay, Shali, that's a handover that we're seeing coming in from the crude point of front, gold point of front, as well the commodity side. But a lot that is happening today and a lot of action that we'll be keeping an eye out on and updating you all. Let's start with the auto pack. We have Bajaj Auto CNG bike launch coming in. So that's what everyone is waiting out for. What's going to be the name? And we do have Shrishti who will be reporting from Pune where the launch is happening as well. So we'll keep you all updated with that. Other than that, UK general elections, that continues to be the focus over there, and we will keep an eye out on that. Do not forget, IPOs are closing as well. MCure as well as MCure Pharma as well as Mansal Wire. They will be closing today. You know, they've already been oversubscribed. What more traction are we getting over there? We'll keep you all updated with the numbers. We do have M&M's AGM today, Sundaram Finance, Welspun Enterprises as well as Escort Kubota's AGM. So keeping an eye out on that. Now, some of these companies will be mulling fundraising plans. They are GPT Infra Projects, Bandhana Spurti, as well as Bank of Baroda. So keep an eye out on that one. As well as if you want to be eligible for dividend for shares of Biocon, PEL, Reddington, Thermax, M&M, then today is the last day for some of these companies that you could be eligible. Also, do not forget, we do have the FADA registration numbers that will coming in, the retail vehicle registration numbers. It's an important one to watch out for. While in Japan, we will be watching out for the housing spends. So yes, important updates that will be coming in, and later on in the evening, let's watch out for the US data points that will be coming in on the employment front, unemployment front, as well as non-farm payroll data points. So these are important factors that we're keeping an eye out on even on the global front.
Well, absolutely, Vinny. Lots of factors to keep an eye on. But since you mentioned UK's elections, the UK's opposition Labour Party is set to win a significant parliamentary majority in the general election, ousting the incumbent Conservatives after 14 years, according to exit polls by Ipsos UK. Labour is projected to win 410 seats out of 650, with the Conservatives at 131. If confirmed, this would be Labour's second largest majority since 1997. The final results are expected in just a few hours from now, with Labour leader Keir Starmer also likely to become the next Prime Minister. So that is what exit polls are indicating, and that's about the UK elections.
Okay, surely keeping an eye out on UK elections, but the minutes from the ECB's June meeting revealed doubts among policymakers about the euro area's recovery, citing lack of evidence in consumer spending. Some expressed uncertainty over inflation reaching the 2% target by 2025. The ECB cut key interest rates by 25 basis points after stable rates for 9 months, emphasizing a flexible approach. What the policymakers are committed to achieving that sustainable 2% inflation with sufficiently restrictive policy rates. That's the highlight coming in from the ECB.
Let's also take a look at what the British pound is doing. That held steady near 3-week highs on expectations of a Labour Party landslide in the UK election. Labour's projected majority is seen as bullish for the pound, equities and UK investments as well, restoring its safe haven status amid global political uncertainties. Investors anticipate a potential rate cut in August after the Bank of England's decision to hold rates steady despite inflation reaching its 2% target. So that is the lowdown coming in as far as the British pound is concerned.
And starting today, the European Union is slapping tariffs of up to 37.6% on electric vehicles made in China. This move aims to stop a surge of cheap state-subsidized EVs from flooding the market. These provisional tariffs will be in place for 4 months as the EU and Beijing continue their intense negotiations. China is threatening retaliation, but EU's officials insist they are just ensuring fair competition.
Meanwhile, let's take a look at what US President Joe Biden said, and he said, "I'm not going anywhere," amid growing calls from Democrats for him to end his re-election bid, using 4th of July celebrations to address doubts about his stamina and mental acuity. Biden emphasized his commitment to the campaign. Vice President Kamala Harris is considered the leading contender if Biden were to withdraw, but his allies believe he can reassure voters and continue his bid.
some global earnings, we did have Samsung Electronics estimated a more than 15-fold rise in second quarter operating profit, driven by the surge in semiconductor prices amid the AI boom. The world's largest memory chip maker sees a profit of $10.4 trillion, won, I beg your pardon, not dollars, it's won, with the revenue likely rising at 23%. Despite the overall profit increase, Samsung's mobile business has experienced a decline.
Alright then, time for a quick break. When we come back, we'll take a look at how the Asian markets are faring and give you some more stock-specific updates.
Welcome back. You're watching Market Cafe on ET Now. Yes, while we did take a check on what the US markets did on 3rd of July, yesterday was surely 4th of July, so yes, there was a holiday, but we did take a check of what happened in the US markets, and because of that, continue to see the traction that we'll see today as well. But Asian markets, how they are faring as of now. What we're seeing in Asian markets, ASX 200 managing to open subdued. Nikkei is also quite subdued in trade, just 0.09% of trade, or 0.2% of gain is what we're seeing coming in for Nikkei. So yes, we're set to keep an eye out on those data points that will be coming in the Japanese market. Kospi managing to hold on to gains of 0.8% in trade, while how Hang Seng and Shanghai is opening up. Let's pull that up in terms of the uptick that you're seeing. So flattish openings that is coming from Hang Seng right now. Not much of an excitement there. Overall, and Shanghai, a bit of a negative side is what we're seeing coming in for Shanghai. So mixed opening is what we could call that is actually coming for the markets in the Asian front, and obviously we spoke about the Samsung earnings also, so that is also something that keeps impacting the Kospi as of now, which is managing to hold on to the 1% of gains. So the best performing right now, I think the index in the Asian markets is surely Kospi when you look at it, though we'll be waiting out for Japanese data points in terms of how that comes in and how the performance of the house spending actually shapes up. Okay, so the numbers just come in. What I'm reading at it as of now is that the Japanese housing spend for the month of May has seen a bit of a dip. 1.8% downtick in terms of real terms is what they're seeing versus last year, versus what agencies were expecting was 0.1%. So clearly it's much sharper than what the agencies were expecting, so keeping an eye out on that. But yes, that's how we are looking at it in terms of the update that has come in from the Asian markets. US markets were closed. We'll wait out for the open today. And European markets, they managed to close a bit on the positive side. So it will be interesting to see in terms of the Indian markets handover and how that shapes up.
Well, absolutely, and we have a lot of conversations to watch out for. First up at 9:20, we'd be talking to Pankaj Tibrewal, founder and CIO at Ikigai Asset Manager. Then at 9:35, we'd also be in conversation with Prateek Oswal, Chief of Business Passive Funds, Motilal Oswal, AMC. And at 9:45, then to discuss banking's Q1 updates, we'd be in conversation with Rahul Malani, banking analyst at Sharekhan as well. At 9:50, then to decode the demerger rationale for Raymond, we'd be in conversation with Amit Agarwal, the Group CFO at the company. And to discuss cement pricing trends at 10 a.m., we'd be in conversation with Dimant Mehta, Chairman, Cement Stockist and Dealers Association of Bombay, as well as Ronald Sioni, Research Analyst, Infra and Cement at Sharekhan. At 10:20, then we'd also be discussing the diagnostics industry outlook with A. Velumani, founder at Thyrocare Technologies. And at 10:30, then we'd also be in conversation with Ashwin Patil, Research Analyst, Auto LKP, to discuss the new era in two-wheelers that possibly is en route as well.
Surely a very exciting lineup on the market for you.
Welcome back. Thank you so much for staying tuned in. Well, SEBI has notified measures for brokers to prevent and detect fraud or market abuse. SEBI has also asked brokers to put systems for surveillance of trading activities as well as internal controls. My colleague Astha Chopra is standing by with more details. Astha?
Well, there is a big news coming from SEBI, where SEBI had asked the stockbrokers to formulate a mechanism for prevention and detection of fraud. Now, SEBI had asked the brokers to put a system of surveillance for trading and internal controls as well. Now, brokers will have to comply with the obligations of stockbroker and its employees. On the other hand, they also have to comply with a whistleblower policy as well. So these provisions of the circular will be coming in place in a staggered manner. In a very simple language, we can explain that the SEBI is asking the stockbrokers to implement the new rules to make sure that there are safe and fair practices going on in the stock market. These rules include keeping an eye on the trading activities, having a clear rules for the employees, having a system in place for the people to report any wrongdoing. So the purpose of this whole idea is to prevent the fraud and abuse in the stock market. Also talking about the applicability for the qualified stockbrokers, the circular will be effective from August 1, 2024. Secondly, for the brokers having unique client code UCC more than of 50,000, the circular will be effective from January 1, 2025. Thirdly, for the brokers having unique client code UCC between 2,000 and 50,000, the circular will be effective from April 1, 2025. The last point is the brokers having a unique client code UCC of less than 2,000, the circular will have to be effective from April 1, 2026. So this is a new step taken by the SEBI, and they have asked to create a mechanism, a system for the stockholders, so that there are fair and safe practices in the stock markets.
Thanks so much for that update there, Astha. But what's the word coming in from the SEBI chairperson? She's saying the regulations needs a grounded approach, not crafted in ivory towers, says Madhvi Puri Buch in terms of yesterday's announcement. Let's go across and actually listen into what more she had to say.
SEBI has believed and has expressed that we believe in the concept of co-creation. And we believe that regulation should not be crafted in an ivory tower somewhere, in the boardrooms of offices. They need to be crafted based on real feedback from the ground. Growth is stable, it's well regulated, it is sustainable. Experience that we have had with our various stakeholders and the associations and the fora that are there has been so very, very positive that we are increasingly becoming more and more committed to these things. The industry and the regulator have no differences of opinion. We both put the investor at the center of everything.
That's the word coming in from the SEBI chairperson, and she's talking about how regulation should not be crafted in an ivory tower. Now, moving on the sidelines of an event, NSE MD and CEO Ashish Chauhan talks about the rise of trading and speculation in the market, adds that the Indian markets will remain robust in the long term as well, and also clarifies on why the merger plan between NSE and BSE units at GIFT City was called off. Listen in to what else he had to say.
Exchanges have not been told to increase the fees.
Okay.
It is the framework which is saying that you don't have to charge on a slab basis, which was a discounted framework. You can charge on an equal basis to everyone. So it's a bit of a miscommunication or misunderstanding on your part. But whatever the case, once the regulators regulations have been formed and issued, we will have to abide by that. And broadly speaking, the transaction charges of exchange are amongst the lowest part of the overall transaction cost which anyone pays, which would be for the investor, it's not that significant vis-a-vis what other charges they pay. It will have impact, naturally. Any regulations will have its own impact, but on the investor side, it's not even a significant, statistically significant number.
Any advice you have for the retail investors, given the fact that the markets are at an all-time high now?
In a way, investment in India is investment in India's future also, and your own future. So at the same time, we must do it with a bit of studies, understanding, and stay invested long term. Sometimes we get a feeling that buying in the morning and selling in the afternoon is called investment. It is not investment, it is trading.
Okay, let's move on and talk about Raymond. Why? Because the second leg of demerger has been announced by the board yesterday. The realty business of the company is now what they are looking to demerge. the board has approved a scheme of arrangement where they will be involving the demerger of the real estate business. This will be into a separate listed entity once the demerger actually happens, and the ratio, the swap ratio is going to be 1:1. So yes, what they will be receiving is that Raymond Limited shareholders will receive 1 share of Raymond Realty for every share that they're holding there. So swap ratio is on the 1:1 basis. Now obviously post the demerger, we'll see this Raymond Realty Limited will operate as a separate listed entity, as a subsidiary of other companies. So we'll be keeping an eye out on that. Raymond Realty Limited is to issue around 6.65 crore shares, which will be valued at ₹10 per share is the face value of that share. Other than that, what's interesting that we're keeping an eye out on is also, let's not forget that lifestyle business, which they've already demerged, that also will be completed by 11th of July was the date that we were watching out for. 11 July 2024 was going to be the record date that was fixed for that. So in terms of the lifestyle business. Now, analysts are highlighting that they feel that this is quite positive for the company because a lot of value creation is possible. Growth prospects are quite positive in terms of Raymond Limited's business going forward as well. So they could exploit that opportunity going forward. Could maybe attract some bit of a fresh investment that could come in, strategic partners that is possible as well. So mainly value unlocking is a key factor that they're keeping an eye out on. Let's not forget in terms of just the financials and business side of Raymond Realty as well. They have 5 ongoing projects right now worth around 9,000 crores in Thane. Total potential revenue is around 25,000 crores over there. They've signed 3 new JDAs already in Mahim, Sion, and 1 more in Bandra East. So, a lot of projects which they're already underway for Raymond Realty, a lot of value unlocking that everyone is watching out for. And the Realty division was reporting around 1,590 crores in terms of revenue is what they saw for FY24, EBITDA of 370 crores at what they had reported, and separate entity also could see good growth strategies going forward. So yes, post demerger, we'll see that there will be 3 entities that would come in for Raymond from the Raymond house. That one would be housing the lifestyle business, that's Raymond Lifestyle. The other one would be the engineering business as well as the denim JV that they have, that will be Raymond Limited. And the third one will be the real estate business, which will be Raymond Realty Limited. So yes, keeping an eye out on this important update that's coming from Raymond.
Well, absolutely. And with that, let's also switch gears to Motown then. Bajaj Auto is all geared up to launch the world's first CNG bike on July 5th. The new bike will have a dual fuel system where the rider will be able to switch between petrol as well as CNG. Let's go across to my colleague Srishti, who's standing by to decode what we know so far. Srishti, tell us a little bit about the value proposition as well versus petrol and EV offering, as well as what the company has indicated about this new CNG bike.
Well, certainly, auto major Bajaj Auto is all set to disrupt the market with world's first ever CNG bike launch. There's a lot of excitement indeed, and why Bajaj Auto is coming out with the CNG model. But before that, let's tell you what all we know so far about this particular launch. So this launch will happen on July 5. Other than that, it's going to be targeting to 100 and 125cc segment, but this is just to start with, because in the next 2 years there are more launches lined up. If we talk about the petrol tank, then yes, indeed there will be a petrol tank, because there will be a lot of anxiety related to the CNG pump stations, though it has a larger coverage with respect to the EV infrastructure. But indeed the company will fit in a small petrol tank as well to cater to the emergency needs. The price expected is around 90,000 is what the reports are suggesting. But the big question is, why CNG and why not EV, where there is indeed already a lot of excitement. So if we talk about the addressable market, it stands at 45% of the overall motorcycle market right now, because of there are so many CNG stations and there's a lot of penetration in the 3-wheeler as well as the passenger vehicle segment. If we talk about the payback period as well, that is actually 1.2 years, and the vehicle cost is considered to be 20% higher than the ICE engine. Now let's talk about the value proposition as per the consumer, and which could be the best best buy for you. So we did compare between CNG, petrol and EV, like you can see on the screens. We did compare the prices because the CNG is expected to be like 15 to 20,000 higher than the petrol variant. And if we talk about the mileage, then you can clearly see, then though EV is giving you the best mileage in terms of the cost per kilometer, you will see that it's the petrol that is costing you the most. Other than that, it's the CNG, and then EV is definitely the cheaper version of giving you the cost per kilometer benefits. But in terms of the payback period versus the petrol engine, then you will see, given the costing and given the battery replacement cost, in terms of the comparison, it is the CNG that is faring the best right now in comparison to the EVs, and indeed ICE is already there. So all in all, a lot of excitement building in for CNG as the vehicle efficiency is expected to be more out here.
Absolutely, Shrishti. Thank you so much for that update there, and we'll be waiting for more updates from you through the day when you will be there at the launch. So on that note, we're going to skip it a very short break. Don't go anywhere. We'll be back with more domestic updates, more stock updates after the break.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to take stock of the quarterly updates that have started trickling in. Let's go across to my colleague Gaurav, who's standing by with the update coming in on HDFC Bank muted deposit growth, largely led lower by current account deposits, right, Gaurav?
Well, yes, HDFC Bank came up with their Q1 updates, and if we look at the numbers, those were actually below the street's expectation and weaker than expected. So when we talk about deposits, the HDFC Bank reported muted set of numbers in terms of deposits on a sequential basis. And if we look at CASA deposit, that was actually a concerning area once again, because CASA deposits declined almost by 5% on a sequential basis. When we also talk about calculated CASA ratio, which was given by brokerages, we saw that calculated CASA ratio also declined almost by 190 bips on a quarter-on-quarter basis. And this time, deposit growth was weaker, largely because of the current account deposits, which degrew almost by 14% on a sequential basis. Now coming to advances, there also we saw a degrowth of almost 1% on a sequential basis, and this was driven by degrowth in the corporate loans. Now this is again actually in line with the management's expectations and management's view from here on to increase more focus on the retail deposits, retail advances, but it was again little lower than the street's expectation. There is an interesting observation which was done by Nomura here. Bank actually disclosed that if we look at the loan book growth, ex-merger impact, that came to 14.9% on a YY basis, and deposit growth was at 16.5%. But Nomura believes that they do not include the HDFC Limited's deposits and loan growth for the last quarter, and that is why this loan growth of 14.9% is what we have seen for year-on-year basis. If we calculate on a pro forma basis, Nomura has calculated the deposit growth somewhere near 15.3% and loan growth somewhere near 10.8%, which is again lower than the overall system growth that we have seen at 15.3% in terms of advances. Lastly, brokerages have reiterated their stance, but it seems that they are also being a little bearish on the bank. So Nomura says that there may be some deterioration or moderation in terms of NIMs for Q1 FY25. IIFL also believes that we may see some weaker than expected results, and that is the reason. If we look at the numbers also, they are not also very happy with the numbers. And lastly, Macquarie also believes that Q1 is actually seasonally weaker, but they believe net interest margin is broadly to remain unchanged for the bank. So definitely watching out on HDFC Bank. Now numbers have come out which were weaker than expected, but let's see how the stock pans out for investors.
We'll keep an eye out on that, Gaurav. But there are other banks also which reported in terms of the Q1 updates, banks and BFCs. What else are you picking up there?
Well, yes. First, let's begin with RBL Bank, where we saw a mixed set of numbers, because if you look at advances, that increased almost by 18.3%, and in that also, retail advances grew almost by 31% on a YY basis. But when we talk about deposit growth, that was a little muted. That was largely because of the bulk deposits, which declined almost by 2.1% on a sequential basis, because bank is now focusing on the granular retail deposits. Next, let's talk about IDBI Bank, where we saw inline set of numbers, because total advances grew almost by 17% on a YY basis. Deposits grew almost by 13%. We saw CASA declining, but this is again an industry trend, and advances growth was largely in line with the street's expectation as well as the bank's expectation. Now let's move on to some of the PSU banks. We have got PNB Bank, which reported inline set of numbers because advances growth was at 12%. It was a little lower than the industry growth, but it was in line with the management guidance. And if you look at deposit growth, that was actually a little lower at 8.1%. But again, if you look at PSU banks, they have a healthy CD ratio. So that is why we may see that the bank actually reported inline set of numbers. UCO Bank also came up with strong advances growth that grew almost by 17.7% on a YY basis. There also we saw deposit growth of around 7.5%. But again, bank has a healthy CD ratio, and that is why we may see mixed set of numbers coming up from the bank. Let's now move on to small finance bank, because we have got Ujjivan Small Finance Bank, where they reported deposit growth of around 22%. Loan book growth was around 19%, but this was again in line with the management commentary, because recently they have cut down the guidance for banks' growth levels. Capital Small Finance Bank also came up with decent set of numbers, but it was a little weak, because if we look at the size of the bank, it is lower, and if we look at advances, that grew only by 16%, deposit growth was only by 10%, and this was again lower than the bank's guidance of 22 to 25% loan book growth for FY25. Lastly, we have got ESAF Small Finance Bank, where we saw advance inside deposits that grew healthy, but the main concern is with asset quality, because gross NPAs increased almost by 185 basis points on a sequential basis, and net NPAs also increased almost by 96 basis points. Let's also watch out for some NBFCs, because we have got numbers from Poonawalla FinCorp. There we saw a strong set of numbers, because disbursements grew almost by 5% on a YY basis. AUM growth was at 52% on a YY basis, and if you look at GNPAs and NNPAs, they are likely to remain below 1% and 0.5% respectively. So definitely watching out on all these counters, because we are getting decent set of numbers in terms of Q1 updates from these counters.
Gaurav, for joining in and telling us about that. Let's also take a quick look at June FPI flows then, as they turned buyers, while inflows from financial services came in at a 6-month high as well. Meanwhile, it was the metals and mining sector that saw some lofty outflows as well. We have my colleague Sharad, who's standing by with an update. Sharad, good morning. Tell us about what really is the data indicating then.
Well, yes, for the month of June, the FPIs have turned net buyers, and this is coming after 2 straight months of outflows coming in. Now, looking at the numbers, the June FPI inflows stood at almost 26,600 crore rupees, as compared to the May month. There was an outflow which was recorded at almost 25,400 crore rupees. Now, even the calendar year 24, if you look at it, the inflow stands at 3,200 crore rupees positive, while the entire inflows which was coming in the calendar year to date last year was almost at 76,400 crore rupees. So which are the segments where the inflows have been the highest? That's something which we'll look out for. First being financial services, almost 9,000 odd crore rupees has come as inflows in the month of June, followed by media, telecom, consumer services, and even material and healthcare, where the range was going between 3,000 to 5,000 crore rupees of inflows coming in. Also making it to the list is capital goods, with almost 2,790 crores of inflows. So these are the sectors where the top inflows were there, but the sectors with the top outflows which were recorded for the month of June, as per the NSDL data, we are having metals and mining, construction, oil, gas, all of them seeing outflows ranging between 2,000 to 3,000 odd crore rupees, and also it's followed by power utilities and the FMCG back.
Thanks, Sharad, for that update coming in. Let's also take a quick view at what the brokerages had to say and which are the counters that they're talking about. When you take a look at what about RBL Bank, what Morgan Stanley had to say, let's also take a look at what they had to say, and they maintain an underweight rating with a target of around 250 rupees, and they're talking about how Q1 initial update also has healthy volume growth, as well as they also declined, highlighted how deposits in fact declined 2% on a quarter-on-quarter basis. So that is something that Morgan Stanley had to say. Let's also take a quick look at what Goldman Sachs then had to say about L&T. They're maintaining a buy rating. They're hiking the target price to 3,700 rupees. And in terms of what they're saying, they're flagging the strong international order book that will be aiding growth as well. And in terms of the core margins, then they're talking about how they are going to be showing slight improvement as well. So that's the word coming in from Goldman Sachs on L&T. Lastly, let's also take a quick look at what Antique had to say about Ramco Cements, and they're downgrading the counter to hold from a buy rating that they had previously. And they also are cutting the target price to 840 rupees. Now, in terms of what they're talking about, they're also talking about how net debt will be remaining in the range of 5,000 crore rupees. And they're also talking about how prices in the south will also remain muted for Ramco Cements. So that's the verdict coming in from Antique on Ramco Cements, a downgrade to hold from buy and a cut in the target price as well.
Okay. Surely keeping an eye out on all those brokerages. But with that, we're absolutely out of time on this edition of Market Cafe. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.